Welcome back. The developers of the Terra blockchain launched the Luna 2.0 token today after shaking the cryptocurrency market earlier this month. And Yahoo Finance's David Hollerith has all the details. And David, we're talking about Luna 2.0 because 1.0 clearly did not work. What's the thinking with this one?
That's right, Jared. So Luna 2.0, or I guess we'll go back sort of to the ecosystem, the Terra ecosystem, which included originally the UST, which was the stable coin for Terra, and then also the Luna token, which was sort of its sister token. They had a relationship where, they sort of maintained each other's value in a way. This new Terra 2.0 ecosystem will include a Luna 2.0. Notably, it'll just run under the same ticker name. And the whole idea of this ecosystem is basically to salvage what has been created, like the other financial apps on the blockchain, without the original stablecoin, which obviously has collapsed. Now, the approval or the proposal was approved by vote and is launching today. And I think the question that a lot of people have in the scenario is sort of, what's going on here? Why is the community trying to relaunch after such a failed project? This seems like a terrible idea.
And who's going to buy the thing, David? I mean, exactly. I don't understand.
Yeah, and Julie, we have two things going on here. One is that there's an opportunity. People who owned the original Luna token before the collapse are going to get new Luna tokens. So if those go up in value, they potentially can reap some of their losses back. Now, that's still obviously it circles around the question, which is who does buy this? Who's on the other side of this trade? A number of exchanges have sort of listed Luna, and that sort of opens the liquidity for it. But the question is a big one, and it kind of ultimately comes down to community. There's a question that maybe there's a lot of developers who still want to build in the Terra ecosystem, and long term they still want to buy those tokens, so they might increase the price. But it seems like a situation that's not really meant to succeed, just as far as like what we've seen in the last month. So an interesting development, but at the very least, I think it's best to think about this as a way to sort of salvage the technology for the people who have been trying to build on it.
Yeah, I think it's still too late for Mike Novogratz's tattoo, though, of Luna, which he got as a big bull initially of that.
It's a perfect cover if you're shorting, if you think about it. I'm not just throwing that out there.
Okay. Yeah, Jared thinks like a trader, of course.
It's a hedge fund guy.
David, I want to ask you about the other stablecoins as well. We had the chance to catch up with the head of Circle recently, who sort of said this positioned them better than the algorithmically backed coins. You had the chance to catch up with Tether, which has actually been seeing some outflows.
Yeah, at the beginning of this week, sort of, it was noted that since May 11th, which was sort of when so there's Terra, the algorithmic stablecoin, and then Tether, and that's obviously a point of confusion for a lot of people. But Tether is the largest stablecoin. It's the most traded cryptocurrency. And on May 11th, between May 11th and basically Sunday, it saw an outflows of about $10 billion. And I got to speak to Tether's CTO yesterday in between two conferences he was attending. The difference that he has hit on is very similar to Circle, which is those two cryptocurrencies, which are the largest in the sector, they're both managed by reserve assets as opposed to sort of an algorithmic model. Now, that being said, Circle and Tether are both fairly different in how they control their reserve assets. Tether for years has sort of had a history of being scrutinized by critics and regulators for, not being transparent about its reserves. Before it started publishing basically the markup of its reserves, it had said originally that it backed it with 1-to-1 with cash. And once they started publishing their reserves, they showed that wasn't actually the case. They cover a couple other higher risk assets. And obviously, if you're a stablecoin issuer and you're sort of balancing your outflows of a currency with your reserves, you want to have things as close to cash as possible or as safe as possible, like U.S. Treasury bills, so that if they need to, they can sort of sell it. It has the most liquidity possible. So they had millions of dollars in fines from U.S. regulators for not being transparent about that. But since then, they have, I will say, taken down the amount of commercial paper they hold in reserves, and that's continued to see a drop. But they publish their audits of their reserves once a quarter, so the most recent one has been in March. So there's still a lot of calls in the community for people to get a more updated real-time amount of the reserves. So again, back when the market saw such a drawdown in the middle of May, Tether, it did slip below its $1 peg to as low briefly for 95 cents. And since then, it has recovered, and it actually looks like it's gotten sort of back up there today. But the question all sort of depends on, not only the confidence for investors in this asset, but also, how quickly they can redeem withdrawals when they come. And the key part of the interview that the CTO brought up, Paulo, was that essentially they have proved through this environment they can redeem withdrawals pretty quickly.
Well, I think we'll have to see if that is borne out, if this continues or if this stabilizes. David, thank you so much for your report.